it's been a big week for stocks. The major index is climbing more than 5%. In fact, up about 5.6 on the S&P, 5.4% higher on the Dow Jones Industrial Average this week. Now, this is coming after a very rough month, June, when stocks fell as much as 2%. But Charlie Bobrinskoy of Ariel Investments came out with barely a scratch. Charlie co-manages the Ariel Focus Fund, which Bloomberg ranks #1 in its class over the last month. Charlie, good to have you back here on the close with Matt and myself. You guys did have a good June when nearly it seemed like every other asset class and most other folks had a very, very tough month. How did you do it?
Well, and we're particularly proud not just of June, but the record we've had since the market bottom in '09. And really, it has been the same trend. It's been being a little bit more constructive when others were so focused on the negative headlines. There have been so many negative headlines dominating newspapers, broadcasts, everybody worrying about Greece and debt levels. And in fact, corporate earnings, which is what stocks are all about, have actually been very strong.
So you think the corporate earnings that we're just getting ready and getting set up for, they're going to be pretty strong again?
Yeah, I mean, we talk to our management teams, and they are just not seeing the downturn that everybody was talking about in the economy. It's not a gangbuster recovery, but it's getting better. And companies have been using the cash on their balance sheet to buy back shares, and so the earnings that they have are spread over fewer shares, and EPS is coming in ahead. So we are seeing positive surprises. We're now looking for more than $100 a share for the S&P, and the market is still very attractively priced.
I want to talk a little bit more about June because you did do some contrarian investing, and the for-profit education companies were something you found interesting. Sheila, let me bring you into this because you're looking, at Apollo Group today?
No, that's right. And, Charles has been a big winner in Apollo Group today. In fact, it was one of the biggest winners in the S&P today. That stock up about 6.5% after posting better than expected earnings. It's not just about Apollo, though. It's certainly an overall trend we're seeing in the for-profit education sector as well. Bloomberg actually has an index that tracks these stock. That is up about 11% this year, so beating the overall market. We certainly do seem to be past an inflection point where the world basically thought, that everything was ending for a lot of these names. But look, there is still a lot of skepticism out there as well. In fact, Piper Jaffray writing in a report today that the trajectory for these stocks is still quite uncertain. Charles, my question to you is the gains for these stocks over? Is the contrarian bet done here, or is there still room to go?
No, we think there's a lot of room to go. These stocks have historically traded at 20-plus multiples. They're competing against the world's easiest thing to compete against, which is government. Government-run schools are horribly inefficient, and these for-profit schools every year take market share because they deliver a better education for less money. So these are great businesses that are growing. DeVry and Apollo are up much more than 11%. DeVry's up about 25% this year. And again, there were negative headlines that made people too pessimistic.
Not just headlines, right? You had even Steve Eisman was saying these things are a big deal in a bad way, right? I mean, you're going up against some pretty big names here.
Yeah, he was short the stock, and it was just outrageous. He got to testify on Capitol Hill at Senate hearings as if he was a disinterested party. He was short the stock, and so he was obviously spinning a very negative tale about the industry when, as the facts have come out, the legislation that got passed is not nearly as bad as people feared.
Charlie, let me get back to this stocks rally we've seen in general. Just talking with some traders here, they said we came into this week oversold, and we're going out of it overbought. Does that concern you in the short term?
No, we did not go from oversold to overbought in a week. That's a short-term trader mentality. I agree completely with what your previous guest, Ben, was saying, that people have been pouring money into fixed income because they've been excessively risk-averse. And so there has been no money coming into equities, and we are now going to finally see that trend reverse as the bond bubble, and I think it is a bubble, is going to burst, and money is going to start flowing into equities, and that's going to drive, I can't tell you next month, next quarter, but long term, I think the stock market's going to be a very good place to be.
Hey, Charlie, one area where money has not been flowing into until kind of this week was financials. And I want to get your opinion on that. Suzanne, let me bring you into this because it's been a solid week for those financial names.
It has really the best week of the year based on looking at the S&P financials as a group. And we had so many things happen. We had the swipe fee regulations not as severe as expected. MasterCard was a big winner this week. We also had Citigroup rally. A number of analysts talking about now is the time to get into this company. It's going to be smaller in a couple of years. years. It's going to have earnings power in terms of the big banks. And then we had the NASDAQ have a rally of nearly 12%. That merger between the TMX and the London Stock Exchange fell through. There's a whole new speculation wave of whether or not the NASDAQ is in play. Perhaps there could be a deal between NASDAQ and London. So that's what we saw. And Charles, my question for you is looking at some of your favorite picks. You like the brokers, but we talk about how trading has been really slow, especially in the second quarter. Are you worried that they're going to take a revenue hit? That's what a lot of analysts are saying.
Yeah, I think the second quarter earnings are not going to be great. But again, it's a highly publicized fact. Everybody knows that. And the stocks are extremely cheap. I've said this on your show before, Carol and Matt, but we've got Goldman Sachs trading at book value. People have fought with each other for 30 years to have the right to buy Goldman Sachs stock at book. And now you and I can buy it for book in the public markets. It's very cheap. Yes, this quarter is going to be a little soft, but long term, Goldman Sachs is worth a lot more than book.
So, Charlie, you own them all? You own Goldman, you own J.P. Morgan, you own all of them, Morgan Stanley, or what?
No, I don't own them all. I did not own B of A because we were concerned that the countrywide legacy problems are real and, if anything, larger than people think. And B of A wasn't as cheap. But we do think the brokers, the high-quality brokers, Goldman Sachs and Morgan Stanley, were cheap. J.P. Morgan is the best-run bank in the country with Jamie Dimon. And then Citi, where I used to work, again, just got ridiculously cheap at about 0.7 times book.
One area you're definitely looking at is energy. Adam, let me bring you in first here, because oil and gas were what, both down today?
Yeah, they're both down today, and kind of a surprise, Carol, because they have effectively been tracking so closely with stocks in the economy. In other words, we got positive manufacturing numbers. We've been talking about it all day, and yet, look at that. Oil was down, natural gas was down, and Charlie, the question is, if in fact these are down because in the case of nat gas, we have a lot of it. And in the case of oil, there seems to be some sort of peace in the Mideast. It's not getting any worse. If, in fact, these commodities start to go down, can you get excited about owning underlying commodity stocks, oil and gas stocks, even if the commodities are falling?
No. I mean, your short-term question is absolutely right. The stocks are going to follow the short-term prices of the commodity. But longer term, I do think that Exxon, trading at less than 10 times earnings, is pricing in a long-term decline in oil prices that I don't think is realistic. I think long-term, I'm not saying next quarter, long-term demand for liquids, oils in particular, is going to rise as this is not rocket science, as we have more demand coming out of China and India and Brazil. The price of oil is going to go up. And Exxon, at trading at less than 10 times earnings when you back out the cash, is just a great risk-reward opportunity.
You know, Charlie, in a day when we love talking about social media and Zynga and Facebook and all those good things, you actually have made a lot of money on healthcare, which as a group is up about 14-15% this year. You still exposed to that group?
Absolutely. And, you know, the theme, Carol, is that when we bought all these stocks, they were in the headlines. Everybody's very upset about Obamacare, and are we going to have cuts in health care, and all of the legislation coming out of Washington. So what we try to do is buy these great companies like J&J and Zimmer and Baxter when they're in the headlines, when there are these negative fears.
Right.
And a lot of that fear is dissipated, and now the long-term trends are all positive.
We got to run. Charlie Bobrinskoy, you have a great weekend. Thank you.